India's digital payment market is on fire, and one company is leading the charge, processing over rupees 4,000 billions in transactions last year alone. Pine Labs, India's leading fintech company, which is behind the POS and buy now pay later solutions, is now going public. But is this IPO a golden opportunity or a risky bet? Let's carefully break it down and analyze.
में देते रहना बाद में पेमेंट करना बचपन से ही कितना सिंपल रहा है ना बिल्कुल पाइन लैब्स पे लेटर ईएमआईज के जैसे ना कोई नया कार्ड ना ऐप ना पेपर वर्क अपने क्रेडिट और डेबिट कार्ड या एनबीएफसी कार्ड पे बस ईएमआई और एंजॉय क्योंकि सिंपल ना बेटर होता है पाइन लैब्स पे लेटर सिंपल है बेटर है
So to understand this whole situation in a better way, let's break this whole video into five major parts. Let's first analyze what does the company actually do. So this company was incorporated in the year 1998 and it was majorly focusing on card-based payments and loyalty-based solutions to retail petroleum industries, rather than today's merchant-based payment platform. But the real shift happened in the year 2009 when India's retail world opened up and Pine Labs saw a huge opportunity in this market of all the merchants accepting the payments. So they built something called as POS-based terminals, which basically connects the store system with banking payment network. Let's take an example to understand this better. Let's assume you went to Chroma, you liked a washing machine, you took your HDFC bank card and you swiped on the Pine Labs POS terminal and a transaction just happens, right? But in the background, basically Pine Labs connects the Chroma store system with banking payment network. And how does Pine Lab earn in this kind of situation, in this kind of business model? It charges a device fee to Chroma store and it charges a transaction fee for the transaction that has taken place. And by the year 2012, they came up with a new weapon called cloud-based POS system, which no longer which the POS-based terminal no longer acts as a payment machine but acts as a service business tool. Let's quickly take an example to understand this also in a better way. Let's assume you went to Tanishq, you like his jewelry, so you took your HDFC bank card again, and you were about to swipe the Pine Labs POS terminal, and Tanishq staff says, "Sir, you have this loyalty point or discount voucher, etc., which appears on sales dashboard of Tanishq, and this is powered by Pine Labs." And how does Pine Lab earn in this kind of business model? It basically charges a monthly subscription fee for the analytics and the CRM software that it offers. So by 2014, Pine Lab was no longer a payment machine, but it was building an ecosystem, and it also entered into Pine Perks, gift cards, and rewards, etc. And Pine Lab by 2015 started expanding itself by entering into EMI and buy now pay later solutions as well. Let's take an example to understand this also. Let's assume you went to Reliance Digital to buy a Samsung TV worth 60,000 rupees. The Reliance Digital staff says, "Sir, you have no cost EMI of 9 months on this HDFC bank card that you're using." Now this no cost EMI is powered by Pine Labs, and Pine Lab earns from Reliance Digital as well as Samsung for enabling this transaction to happen. And Pine Labs also, acquired quickly a big name in gift card industry and soon powered loyalty and prepaid programs for hundreds of brands. Now you have all these Amazon voucher cards and Shopper Stop voucher cards, right? All these are powered by Pine Lab. And basically, Pine Lab earns fees for gift issued or redeemed from the customer and also marketing or loyalty software charges to the brands it offers to. And Pine Lab, they bought Fave, a Southeast Asian deals app, giving them millions of new users and regional footprint as well. And in 2024, they made a big move from moving from Singapore to India, and they are preparing for something big. And what is it big? We know it, right? They're coming up with a big IPO right now. So right now, Pine Lab is building an ecosystem. They've already built an ecosystem. Let's take an example to quickly summarize the whole thing. Let's assume you went to Titan to purchase a watch, right? So the Titan's staff says that you have this gift voucher or discount voucher. Now this is powered by Pine Lab. You were about to pay using your HDFC bank card, and the staff says there's a no cost EMI, right? So that is also powered by Pine Lab. And then you want to redeem your discount voucher or loyalty point. That is powered by Quick Cleaver, which is again Pine Labs. Right. So now Pine Lab is going to come up with a huge IPO of massive 3,900 crores. Now, the only thing we need to see is whether this Pine Labs IPO is a game changing thing or it's going to be a risky bet, right? So let's analyze carefully one by one. So for fintech companies like Paytm, Zaggle, Pine Labs, etc., KPI, key performance indicators, become a crucial point to be considered. And that's what even I have done. I've taken a screenshot from the red herring prospectus which Pine Lab submitted to SEBI and attached it here and made a quick summary of my observations in my PPT presentation. And for fair comparison, I have considered Paytm to compare with Pine Labs. So firstly, let's see the platform GTV or the scale of operation. If you can see here, the Paytm's scale of operation is better than that of Pine Labs. But I think it's not of a major issue because Pine Lab majorly focuses on merchant-based POS and installments, and Paytm focuses on consumer wallets. So Pine Labs GTV is much more better in quality. That is much more monetizable per rupee, right? And even the merchants and number of transactions also, if you can see, Paytm is better than that of Pine Labs. But this is also not a major concern because Pine Lab focuses on high-value retail merchants, right, like fashion, electronics, restaurants, etc. Whereas Paytm focuses focuses on Kirana stores, right? And UPI only users. So while Paytm focuses more on quantity, Pine Lab focuses more on ticket size and depth per merchant. Now, when you come to the revenue perspective and margin, also, I don't think there's much of a problem with respect to Pine Labs and Paytm. Pine Lab is doing pretty well in terms of efficiency as well. Now, let's quickly come to the financials. Revenue also, if you can observe year on year from 2023, year on year, revenue has been increasing, and the profits, there's no profits, but then the losses are decreasing year on year. But one observation which you can see is in the year in Q1 FY25, if you can see there's other income of 37 crores, right? Even after other income of 37 crores, we can see a 4.8 crore of losses in Q1 FY25. But one major thing which is worrisome according to me is what the management has written in the red herring prospectus. There's an internal risk, and management says that there can be no assurance that we will not continue to suffer losses in the future. So this can be a bit worrisome according to me. But let's analyze the financial perspective of Pine Labs in a better way in the fag end of the video. So let's quickly look into the valuation chart of what Pine Labs has submitted to SEBI. We can see revenue from operation. We can see EPS. EPS is negative for Pine Labs. EPS is negative for Paytm. EPS is positive for Zaggle. This is an important point to be noted because Zaggle also came public recently. And return on net worth also, it's negative for Pine Lab, negative for Paytm, and positive for Zaggle. Fine, let's come to the most important topic of today's video. If you can observe the screen, in 2023, Pine Lab is in losses, 2024, Pine Lab is in losses, 2025 also Pine Lab is in losses. But in Q1 FY25, in the year of IPO of Pine Lab turns profitable. So when I deep dived into the financial statements of Pine Lab, I saw 371 million of other income. So I went on to look into note number 27, and I saw liabilities and provisions have been written back to an extent of 255 million. Now, if you remember, recently in my previous video about Lenskart, a similar situation had happened where the company had revalued the deferred payments lower, thereby giving an accounting gain, a non-recurring accounting gain of 7 million. So one point to be noted is this is not a real profitability of the company, right? This is not from the business of the company. This won't be happening in the coming years. So this 255 million seems to be artificially inflated, right? And I also observed one more situation in depreciation and amortization expenses, where this year the company's depreciation has reduced by 700 million. So this is also a non-cash expense. Basically, this is a non-cash expense. This is not from the business of the company, right? The reduction in depreciation expenses increases the profitability of the company. In the recent past, we have been observing companies which is coming with IPO, making these adjustments. Now, I'm not really sure if this is a very good thing to do, but this definitely is not from the business of the company. This is an accounting adjustment. So yeah, this is an accounting adjustment and not profitability of the company. So let's come to my favorite part of the video. The company is asking for 25,000 crores of valuation. Basically, it might be asking 10x of the revenue, right? I'm not considering the profits of the company because currently it's a loss-making entity. Now let's consider the PE of Pine Lab to be 30, basically 1.5 times of the growth, assuming the company grows by 20% year on year. And let's consider the profits. Currently, Pine Lab is in losses, but let's assume Pine Lab in the coming year makes a profit of 300 crores. Right, then also the valuation is somewhere around 9,000 crores, right? 300 crores of profit into PE of 30, 9,000 crores. Somewhere the valuation comes in at 9,000 crores. Let's be more optimistic. Let's assume PE to be 40. Then also the valuation comes somewhere around 12,000 crores. Now, I'm not really sure how company has come up with 25,000 crores of valuation. It seems to be very, huge valuation for me. But yeah, this is the valuation of Pine Lab, and this was a small video about Pine Lab's IPO analysis. And disclaimer, I'm not a SEBI registered person. I just enjoy making finance videos. I'm a student of stock market, so there's no buy or sell recommendation from me. Yeah, thank you.